By some estimates, the United States legal cannabis market is projected to reach $11 billion in consumer spending in 2018 and more than $23 billion by 2022. Joining us now is Peter Barsoom. He's the CEO of 1906. So you have a background actually on Wall Street. You had worked for Merrill Lynch and Morgan Stanley, and now you're on a mission to redefine the edibles market. What needs to change in edibles that they need you?
Well, you know, the quality of the cannabis that we smoke has improved significantly over the last 10 years. Far better cultivation techniques, more strains available so that you can dial in either the flavor or the effect that you want. But edibles have not progressed as far. Most edibles suffer from three major problems. One, they taste bad, strong hashy flavor, bad ingredients. Second is you have no idea how they're going to make you feel. And then third is the fact there's a long delay typically between when you ingest and when you start to feel the effects. So that really only creates a market that serves either people who really need to or want to get very high. And for the rest of us who don't have 6 hours to have a date with an edible or don't want to play Russian roulette.
I don't have 6 hours to do anything, basically.
This is all really interesting.
I don't have 6 hours to sleep.
So these products that you brought here solve those problems. They don't taste terrible.
They taste amazing.
They get you. You can calibrate the high you get, and you get high quickly.
Exactly.
Right?
Yep.
Wow.
So very functional, and it's intended to serve high functioning
But here's
adults.
the problem, Peter.
Yep.
Like, how do you open this?
Well, some of them are about chilling, love.
Right. Okay. So open this up. We'll pull this right out. So this is chocolate right here.
Yep.
But see, if I was going to do this right here, this is the problem.
Well, this will put you to sleep. You don't want to. This is the midnight one.
Oh, okay. Well, it is. Okay, but this will be. Here's a problem with your product. This is. If I do that, a policeman's going to come right in here and arrest me. It's illegal. I can't do this right here in New York, right?
Technically, no.
Okay.
So let's talk about the states.
Unless you have your medical marijuana card.
Yeah, you need your card, Andy. Get your card.
But it isn't a lot of states.
But you are in Colorado. California is seen, it's the biggest cannabis market, but you're not pushing to California.
No.
Tell us about the states you're going to and where you see the most growth.
We think that the greatest opportunity is actually going to come out of the East Coast. The East Coast is where a lot of brands are built, and this is a market that is far more interesting to us. It doesn't have the same stoner culture that California and the West Coast markets do.
Surfer dudes.
I mean, these look like very consumer friendly, and I do feel like a lot. I'm not doing anything. A lot of people that watch this show have kind of been introduced to the cannabis trade in just the last 3 months. So big tickers for us like Tilray and Aurora. And I know you've said it's kind of too early to think whether those are going to be like the next Amazon or the next Pets.com. But you do think that one of the unfortunate aspects of this valuation craze is that it has disproportionately rewarded farmers instead of brands.
Correct.
Can you tell me what that means and why you see that as a problem?
Yeah, you know, in any other consumer market, right? This is a consumer packaged good. Like if
yeah,
you
I mean,
take
it just
alcohol,
looks like something you would, I don't buy at CVS.
Exactly.
And you will soon.
And hopefully. And what you see is in almost every other market, it's the brands who get a disproportionate share of the value that's created. What we have here is many of these companies.
Looking at the chill, excuse me. Chill.
What you have here is that many of these companies that went public, they're basically cultivators, farmers, right?
They're just growers.
They're just growers. And so imagine a world in the alcohol world where it was the barley farmers that got all the value and the brands were second. And so that's the way in which, unfortunately, the public markets today are valuing cannabis companies based upon how much cultivation they have and what they're growing and how much they're growing.
So they're not really consumer product weed plays. Yeah. Are you public, by the way?
No.
Okay.
And you get asked that a lot, though, right?
Yeah. Yeah,
we're
constantly asked if and when we're going to go public. And frankly, it's too early. I mean, most of these companies in any other environment, they're too immature and the sector is too young for either these types of valuations or for being public right now. But that's the way in which, unfortunately, to get large amounts of capital at low cost.
Does your Wall Street background help you?
Absolutely, yeah. We have an A-list group of investors, including finance professionals, media professionals, some funds, and a big
You're
part
not
of
an investor. I mean, because you're a media professional.
I am not an investor,
Okay,
but this is
interesting.
Neither am I.
Yeah. Right, no,
you do have a lot of A-list investors, but they don't want to talk about it or have you talk about it. What do you think that means about the cannabis trade right now?
Well, I think what it means is that it's still a stigma. There still is a stigma associated with cannabis. When Elon Musk gets in trouble for doing something which is totally legal in the state of California, still shows that the public is not fully ready yet. Even though 67% of Americans support legalization of cannabis, we still have a way to go to overcome the stigmas and the just say no era of Nancy Reagan.